I've got another Robo-Advisor review for you guys. Today we're going to be taking a look at SoFi's automated investing. And this one came up on our radar screen because it's literally been flashing "it's free" at me everywhere. But then on top of that, even NerdWallet, Motley Fool gave them super high reviews, meaning 5 out of 5 stars, stuff like that. So anyway, definitely thought we had to take a look at this too, see if we agree with those reviews. I'm going to be going through the process of signing up for an account and letting you guys know if I think you should go for it or pass on it. Hey guys, Jessica here. Before jumping into it, really quick call out that we're Uprise. We're a VC-backed fintech company that is working on building the best financial plan experience in the world. One number, 1.5 million. That's how much on average we've been able to find and add to customers' lifetime net worth. And the way we do this is we look at people's specific situations and help them figure out things to optimize. Things like savings accounts, paying down debt, saving for retirement, optimizing employer benefits, all of this kind of stuff. And this is a lot of what we do, by the way. We take a look at a lot of the financial products out there and make sure that you're using the best financial products for your specific situation. To get your plan, definitely check us out. I've linked to us in the description below. And please give this video a thumbs up, hit that subscribe button. It really, really helps small channels like ours. So getting back to it. SoFi is a financial institution that's been around for a little over a decade, so still relatively new. And they started off in student loans, helping people refinance student loans. And they still do that, but they've also just sort of ballooned into a ton of other financial products, from loans to banking and everything in between. Quick call out, by the way, one of the co-founders of SoFi is actually an investor in Uprise. We were really excited to have his expertise as we're building up from scratch. But that said, A, he's no longer with SoFi, and B, even if you were, that would have zero impact whatsoever on this review. So jumping into the automated investing service, what I'm going to do in this video is I'm going to pull up my screen. I'm going to walk through the process of signing up for an account. And then along the way, you'll be able to see sort of how easy it is, how the fees work, is it too good to be true, what they invest you in, and stuff like that. And as mentioned, at the end, I'll let you know if I think you should go with it or pass on it. Okay, guys, I'm here on the SoFi website, and I'm going to get started. You can see down here, they've got like a bunch of different financial products. I'm going to click in here into investing. Okay, now I'm on the investing website, but even on the investing website, there are like a bunch of different investing products they have. So scrolling down here, you can see they have like crypto, they have a Robinhood competitor. I'm going to be clicking into here, automated investing, which is their Robo-Advisor that we're reviewing today. Click here. Okay, so now I'm on the automated investing website. Finally, just taking a really quick look through, you can see they talk about how they're the top ranks. They were rated highly by Motley Fool. They set up here. And as mentioned, like they were rated very highly by NerdWallet as well. Also just looking through here, again, they say very clearly, no SoFi management fee. And so this is the part that I'm going to be looking into more today, which is like, how is this possible? Because as comparison, right, like Betterment, Wealthfront charge 0.25%. Vanguard charges roughly 0.15%. So I'm going to be digging in a little bit more on that. And I'm just going to click here to get started. One really quick call out on this: before signing up for any financial product, I normally like to just look around to see if there are any promotions or discounts before signing up. But I did a quick search for SoFi. I didn't find any promotions out there. So I'm just going to get started straight from their website. Invest now. Okay, great. Start an account. Go ahead. All right. Are we opening a new account or transferring an existing one? So this is good to know that they also have retirement accounts available in addition to normal investment accounts. I'm just going to go ahead with a normal investment account today. Great. This is pretty standard with all robo-advisors, just trying to get an understanding of why you're investing. I'm going to just test it out and say, okay, I'm saving for a large purchase or expenditure between 3 to 5 years from now. And what I would expect to see when I say something like this is that the portfolio has to match this time frame that I'm looking for. I would expect that a portfolio that they recommend for me, if I had said, say, retirement, that I'm saving for retirement, would look a lot different than what they're recommending for me here. Okay, here. All right, so they're recommending for me a moderately conservative 30% stock, 70% bonds, which is fine considering, again, I'm hoping to cash out that money within 3 to 5 years, but stocks and bonds is so vague. Let me click into here. Okay, so this is where it gets interesting, which is where are they putting my money if I invest with them? And this is super interesting that they have proprietary ETFs. I definitely want to look into this more. The rest of these actually look pretty standard, especially just taking a look at the two biggest buckets. So Vanguard short-term bond ETF, 42% in iShares municipal bond ETF. Like in general, Vanguard and iShares are very well-known ETF names. They're low fee, very liquid. And so these look pretty standard actually, but I want to double click into here. Okay, here. So this is the SoFi Select 500 ETF. It's composed of the 500 largest publicly traded U.S. companies. So this is an S&P 500, I'm assuming, like ETF, but it's their standard one. It's a bit weird that the expense ratio here is blank. I'm assuming that means it's free, as they mentioned, which is great, but I'm going to want to dig in here a little bit more. And then clicking down here, this is the next 500 ETF. Okay, so 500 mid-cap U.S. companies. Again, same thing. Expense ratio is blank, which I'm not really sure what's going on. But then clicking down into here, say this other big bucket of the municipal bonds, like that is populated. The expense ratio is 0.07%, which is a very good expense ratio. Okay, before jumping deeper into these ETFs, I want to see what it looks like with the other portfolios. So if I click into retirement accounts, it is pretty much the same here. So the main difference I notice here is here. Instead of the municipal bond ETF, they invest in the Vanguard total bond market ETF. The proportion in terms of the proprietary ETF still looks to be pretty much the same, but let me click in here. So yeah, so the expense ratio is 0.05%, very good. What I want to say about this fund, this makes sense why you would do the total bond market ETF instead of the municipal bond, because this is a retirement account, so this is already tax advantaged. Municipal bonds are also tax advantaged, so it kind of defeats the purpose to put municipal bonds in retirement accounts because you wouldn't be able to take advantage of those tax benefits. So this all makes sense. Let me click out of this. I'm curious as to like, hey, if I were saving for retirement instead, what that portfolio would look like. So let me click into aggressive and the 100% stock. 100% stock, it seems like much more heavily weighted in terms of these SoFi ETFs. So clicking into here, this is the same one, the S&P 500 one. So much more highly concentrated there. And then clicking into retirement accounts, nothing huge there. Let me exit out of that. I'm curious if I was like way conservative, what does that look like? This is interesting because there's actually no SoFi ETF. In fact, like all of it is sort of third-party ETFs, well-known, 60% in this one with an expense ratio of 0.07%, which is great. I get the hunch that most of SoFi's customers are younger and as a result, probably skewing more aggressive, more of that stock portfolio. So that's probably why they're focusing on creating ETFs for those portfolios first. Probably they will come and do proprietary ETFs down here as well at some point, but probably isn't the biggest priority. Okay, let's take a look at those SoFi ETFs. So they actually have a page entirely about their ETFs, their SoFi ETFs. So scrolling down here, you could see they have like these cute tickers for different ETFs that they have, but I'm going to click here into SFY. This is the one that seemed to have the heaviest weight in their portfolios. And so I'm going to click in here, view details. Cool. Okay. So fee-free for at least the first year. Scrolling down, the one thing I wanted to point out here was I figured out what was going on. So basically, this fund has an expense ratio of 0.19%, but there's a fee waiver happening right now where that 0.19% is discounted. That's why the expense ratio is blank, because currently it is free, but it's a fee waiver. It's not a permanently free kind of ETF. So I'm going to click in here and get some details from the fact sheet. Okay, so here I can see the same thing. You know, the 0.19% is being discounted. But if you scroll down here, it says the fund's investment advisor has agreed to waive its management fees for the fund until at least June 30, 2022, which means that this fee waiver of 0.19% is only guaranteed until June 30th, 2022. I mean, maybe they will extend it, but even still, like when I think about investing, I think about investing for the long term. Like when you sign up and open up an investing account, you're signing up for the long term. And for me now to know that at some point this fee waiver is going to expire and this is a 0.19% S&P 500 ETF. That is crazy high. Like the alternative is VOO, which is Vanguard's S&P 500 ETF, which has a fee of 0.03%. So significantly less. So I'm just going to check the other one. If I click in here, the SFYX, this was the other big SoFi ETF that they were investing people's money into. Again, fee free for the first year. If I scroll down here, exactly the same, 0.19% with a fee waiver. And if I click into the fact sheet, same thing here. Actually, here, this is interesting. It's actually showing 0.21% with a fee waiver of 0.19%. Seems like there's a little footnote here. So it's basically they're saying that the extra 0.02% is from acquired fund fees and expenses. Regardless, again, same thing. They've agreed to waive the fees until at least June 30th, 2022, with no guarantees that it will continue to be waived after that. I just want to point out one other thing here. So our team looked into that SFY ETF. Okay, so here I'm on Fidelity's website trying to get more information about the SoFi Select 500 ETF. I'm going to scroll down here to see this thing called tracking error, where it says 3.26. What the tracking error is that it takes the S&P 500 index and then compares it to the SoFi Select 500 ETF and then sees like how on top are they, like how in line with the S&P 500 it actually is. 3.26 is really high because if I go back here and I compare it to VOO, which is Vanguard's S&P 500 index, I scroll down here, the tracking error is 0.02. So you can see that the SoFi ETF is way, way higher than the Vanguard ETF. There is zero reason why a ETF that is supposed to be tracking the S&P 500 is so far off from the S&P 500. Okay, I'm going to click back and I'm going to just stop here. I'm not going to continue on with this portfolio because I don't think it makes sense for me, and I'll share with you guys a little bit more why. Before I finish up, though, I just wanted to call out one thing here, which is that SoFi offers the ability to talk with the financial advisors. And I took a look on other websites where they say all of these financial advisors are certified financial planners. So they have a fiduciary duty and they're well trained and this kind of stuff. I still don't fully trust it, but I definitely think that this is an area where SoFi stands out, that they allow you to talk to a real human completely for free. So that's pretty cool. One final thing to call out here is that tax loss harvesting, which is a tax optimization strategy that some robos offer. SoFi does not offer that. To sum everything up, I'm going to be passing on SoFi's automated investing service. Two reasons, right? The first one is the fact that the fee was pretty high and it's only free now because of a fee waiver, but I would expect that in the future that fee would go back up to 0.19%. And then the second reason is because of that high tracking error to the S&P 500. There's no reason why there needs to be such a high tracking error. The other thing I wanted to say about the fee, though, is that 0.19% is actually not bad. In aggregate, right, there's no management fees. And if the only fee I'm paying is 0.19%, and it's actually not even 100% of my portfolio, the total blended expense ratio is probably going to be lower, which is not bad compared to, say, Vanguard's Robo-Advisor, which is one of the lowest cost ones, is currently at 0.2%. So it's still pretty cheap. But the thing I wanted to say is, like, I don't have much confidence in them being able to keep that over the long term because they have to make money somehow. My expectation is that going forward, in addition to those S&P 500 ETFs, they also start moving like to other ETFs. They would replace, say, the bond ETF and things like that because they have to make money somehow. And this is one way to do it. So I think the challenge here is that I just don't have trust. Given the way they've set up their program and the lack of transparency, I don't have a lot of trust that they won't keep doing that and that the fees for this portfolio keeps going up over the long term. And the thing I want to say here is that when it comes to investing, like I want a long-term partner. And actually, that's how you should be thinking about finding an investing company. You want a long-term partner because it's kind of a pain in the ass to like close this account down and open up a new one and then transfer your holdings over. There's a lot of paperwork. And then on top of that, frequently there are fees. So I took a look at SoFi. If you want to close down their automated investing service and transfer those shares out, you would have fees of $75 to close down your account. So that's just another thing to keep in mind. The other alternative is to like sell all of your assets, take the cash and then invest it somewhere else. But then that has a lot of tax implications. So point of this is you should be looking for a long-term partner. And in the way SoFi is set up right now, it just doesn't give me a lot of faith that they're the right long-term partner. I could totally see how NerdWallet and Motley Fool might be evaluating them in the short term, but that just feels a little bit short-sighted to me, especially because investing is definitely for the long term. And that's it. Those are my thoughts on the automated investing service from SoFi. I'd love to hear what you guys think as well, if you've had experience with it, or if there are other robo-advisors or just any other financial products you'd like us to review, let us know in the comments. Also, if you'd like more support with personal finance, definitely check out Uprise. As I mentioned before, you can find us in the link in the description. We put together personalized Wall Street level financial plans completely and 100% for free. So if you have any questions about what kind of investing service to use, how to optimize employer benefits, budgeting, paying down debt, whatever it is, we'd be happy to help. And on average, we found $1.5 million to add to customers' lifetime net worth. Other than that, if you'd like to see more videos like this one, please give us a thumbs up, hit that subscribe button, and click the bell for notifications. I'll see you guys next time.